Insellmilkom Sinjuri, grazzi li qed issegwu il-programm. Illum għandna intervista ma' Patrick Perret-Green li huwa speċjalist tal-ġeopolitika u tas-servizzi finanzjarji. Thank you very much, Patrick, for coming to speak to us today.
Well, thanks for having me, Leah.
I was quite intrigued because you've moved to Malta. So my first question today is, why Malta?
Oh, there's a variety of different reasons. I started work in 1987, so I'm actually 60 now. My family are grown up. They're all off working with their partners and everything. And I've been sort of living in London, apart from when I've been abroad, for really since I went to uni in 1984. And I just got to the point where I thought, yeah, it's time for a change. I like some better weather. And I looked at a variety of different places. And I came over here in the September of last year for about 8 to 10 days to have a good look around. Liked what I saw. You know, it does have certain advantages. You're in the EU. Or some people might say you're not. Everyone speaks English. Mm-hmm. You drive on the proper side of the road. And you know, it's 3 hours to London. And it's sort of, I've been here really since the beginning at the start of this year. Mm-hmm. And I'm really, really enjoying it. It's got its unique character. But yeah, I mean, it was interesting. I had to go to a business trip in the US last month, and it was one of those, you know, Malta to London to New York, all the way through, and then coming back. And I got back on the Sunday evening, and it was the first time I actually got back, and I thought, oh, I'm home.
Really? So quickly?
Yeah, but yeah, it's good. It's good. I enjoy it.
And was that your first experience coming to Malta?
No. I used to travel all around the world for work. I mean, we do these horrible round-the-world trips, literally in the space of a fortnight, seeing central banks, asset managers, etc. So no, it was. I mean, I considered Dubai, but it's too hot and too horrible, and the idea of being in the EU. So I thought about Italy. Mm-hmm. By blood, I'm actually half Italian, hence I can't stop my hands moving. Yeah, Malta just ticked the boxes for me. And there's other sides of things. It's more business friendly than a lot of other countries within the EU. Mm-hmm. It still has a lot of work to do, I think. I mean, we all know that. I was reading an article. It was a leader in the Times of Malta the other day, and it was saying, you know, Malta likes the benefits of being in the EU, but it doesn't necessarily like the disciplines of it. Mm-hmm. Mm-hmm. But I do think that you know, I've lived in Singapore for 2 years, so Singapore geographically is almost about the same size as Malta. Mm-hmm. The only difference is the population is almost 6 million now. So
you don't feel we're too overcrowded here?
Well, Singapore. It's different. I mean, in Singapore, everything is high-rise. Mm-hmm. I mean, you don't want to see Malta like that. Mm-hmm. I mean, there's little of any architectural merit or history in Singapore. Mm-hmm. But yeah, I mean, Malta certainly is feeling a bit crowded. We know that from the traffic. Mm-hmm. I mean, I was over.
But it didn't put you off, which is good. Which is good. You speak about Malta being business-friendly. How does that impact you and what you do?
Well, as someone who owns and runs their own business, quite a lot. I mean, I must admit, events in the UK where not even with the new Labour government, but even with the previous administration who were in for 14 years, have become progressively less and less business friendly. They seem to think that businesses can just keep on taking an ever higher burden of costs, and we have, for example, it doesn't really affect me, but we actually have the highest energy prices in the EU, partly because of the ridiculous way that the UK structures the energy prices. But actually you are seeing businesses closed. I just saw today in the Financial Times that the largest fiberglass producer in the UK is shutting shop because of the high energy costs. So it's you get to a certain point where you just feel like, okay, I've paid tax, I'll pay my tax here, but I'll pay my tax in an environment where I'm incentivized to be here rather than actually going, why am I working in the UK?
You mentioned the new Labour government in the UK. What impact has the government had on the UK economy?
I can put it the other way around. It's had a very positive impact for a lot of other economies. So, for example, we can all talk about non-doms, kings and rich people and the abuse of them, but the reality is that the top 1 to 10% of taxpayers pay most of the tax. And we've seen a mass exodus of very wealthy individuals. After China last year, the UK lost the highest number of millionaires of any country in the world. I think it was over 10,000. And we're seeing, like the head of Goldman Sachs in Europe, he's moving to Italy from London. You've seen the owner of, I can't remember the football club he owns, Everton or Sawiris, the Egyptian guy. They're relocating to Italy and Dubai because they've come out with this ludicrous thing that they're now going to introduce inheritance tax on your overseas assets as well. And people are just upping sticks and leaving. We can all talk inheritance tax as an issue. You work all your life, you pay your taxes, you save your money, and then when you die in the UK, they take 40% of that off you as well. So there are things like that. I can give a microcosm one. So, for example, I still own a couple of pubs in the UK, but I rent them out now. But they did this tax change, and it doesn't sound a lot, but if you think about a bar or hospitality or retail, you have lots of part-timers, often students, whatever, and then often it's seasonal as well. So there's a little thing we have tax and we have national insurance. It's not actually national insurance; it's just another tax. But there was a threshold of £9,100 before on an employee's wages before the employer had to pay 15% on top of that national insurance. They cut that to £5,000. Instantaneously, for a small business, that's an extra £625, another 7% increase in costs just for that one individual. So what we've seen is in the UK, in the past 7 months, payroll employment has actually fallen by about over 250,000. Small, and funnily enough, the areas that have seen the biggest cuts have been hospitality and retail. So rather than helping people who are generally on low incomes and want part-time work, they're actually hurting people.
But that's what the Labour government should be about, helping people on lower incomes.
Well, not helping, it shouldn't be about hurting. Actually, it thinks it's taking money off the employers.
Yes.
But actually it's taking, what's happening is you'll see restaurants, often they're closed on a Monday night. Now they'll be closed on a Tuesday night. So the hours are getting cut. So actually those people, lower income people who would tend to do those sorts of jobs, which are paid less as a whole, but they're still above the generally minimum wage or higher, they're the ones who are actually suffering the most because they're losing that work. So that brings us back to that classic 1979 advert that Margaret Thatcher had going into the election, which basically was a picture of a dole queue, and it basically says Labour isn't working.
And do you think the Labour Party is working in the UK?
No.
No. But, I mean, they've recently been elected, so there's still quite a number of years
Unfortunately,
for another election.
So I mean, we've got a big, like many countries, we've got a big political divide now. In a very low turnout election, which I think it was only about 60% compared to the normal, I think the previous one was about 66 or 67. Labour got in with a stonking great majority, but with only 34% of the vote because of the way we have first past the post constituencies. So they have the most. If you look back historically, they have the most number of MPs for the least number of votes ever cast. So they have this huge political power. The problem is they don't know how to use it. And those who understand economics, there's an economist called Arthur Laffer who basically invented this thing called the Laffer curve. And it's basically, if you tax it 0, you're going to get no revenue. But if you tax it 100%, nobody's going to work. So it's called the Laffer curve. And unfortunately, Rachel Reeves, my line is, Rachel Reeves thinks the Laffer curve is a joke. So for a woman who purports to be a trained economist, she has a very little understanding about practical economics.
I mean, the way we're hearing about it, the way you're talking about it also, it seems like there's a very bleak future ahead in the UK.
Oh no, UK has it will keep on grinding on. It does. It's the nature of the beast. I mean, I remember, I'm old enough to remember the early 1970s and big strikes, and we had the 3-day week, and literally we had power cuts, and we were burning candles in our home. Like, I think it was 1974. I was 9, but I still remember one of those visceral early memories you have. So the country is miles better than it was. When I went to London to go to university in 1984, London was a mess. Transport system was horrible. People smoked in the tube. And actually London now, the infrastructure in London is fantastic. Unfortunately, the rest of the country lags behind because London is the UK remains London-centric. But no, London has come on in leaps about. I mean, I describe it because I was privileged enough through work. Every year I go to New York 3 times, Tokyo twice, Sydney, Hong Kong, Beijing, whatever. I still describe London as the only global city. There's so many different nationalities. The food is, people joke about English food. Food now in London is fantastic. It's in the UK as a whole. But it's, whereas even in Tokyo, or certainly in Manhattan, everything seems slightly limited. It doesn't have the same range. It feels slightly parochial, whereas London is this great big, and a history of it, and you can walk around. I always say to people, if you go to London, just walk. Don't take the tube. And
what's surprising about London is that areas that were considered not very safe are very trendy today.
Notting Hill being a classic case in point. One movie,
yes.
And I remember looking at a flat in 1995 in Bayswater, and Notting Hill came out, and it didn't really do much. Notting Hill came out, and if I wanted to buy that property now, I have to pay 10 times as much.
Absolutely.
Which is far more than you've seen in other parts of Britain.
Yes, yes.
So yes, you've had the various bits, but also just the way that London advanced, the financial markets, the city, the spread of wealth. Canary Wharf, for example, is the highest average income of any location in the UK. And it's still, I mean, financially, London is an absolute powerhouse. If London's closed, global markets are quiet.
Absolutely. You're mentioning Canary Wharf and the city. The area in between, East London.
Oh, yeah.
There are many areas in East London, for example, Shoreditch, that are very trendy now.
I used to live in Peckham, and this would have been like 1991. So it was quick, it was great, 8 minutes to London Bridge, so I just had to walk across the bridge to be in my office. But even though I was a strapping 26-year-old playing rugby, I would get off the station and I would walk home with my keys between my fingers. Now Peckham's gone posh.
Yes, all the East End, I think, is.
But I'm just saying, London, it's a dynamic city, it always has been, it always will remain so, for all its ups and downs and wobbles.
As a geopolitical expert, I'd like to ask you about the impact of geopolitical turbulence on the global economy.
Events in the Middle East, not really. I mean, the world is far less dependent on oil. Going back to 1974, a large part of the inflation was triggered in 74 from the Arab oil embargo, because they got fed up of having, they were fed up of being paid peanuts for oil. And the price of oil quadrupled, and we had several years of very, very high, inflation at 25% and stuff like that. And now the US is the largest single producer of oil in the world. its carbon output is equivalent to over 20 million barrels on a day. You've got other countries like Brazil producing, or Guyana. So OPEC doesn't have the control. The world is far less oil intensive. And yes, there was clear disruption added to inflation in Europe and the UK. I mean, UK is part of Europe, not part of the EU, but it's still Europe. Meant the inflation experience, because of its dependency on gas and everything like that, was worse than it was in the US and lasted for longer. But overall, geopolitics have had, the biggest disruption, although when you look at markets and how they've recovered, is clearly from an economics perspective, the tariff side of things. But there are other structural issues going on. For example, the way China has come out with it, basically in 2014, 2015, Xi Jinping came up with this policy of made in China. So huge subsidies going in. China produces practically all the solar panels in the world. Great, most of the shipping, apart from the Koreans and the Japanese, and it's moved up the value chain. So China is, I just saw latest headlines last month, China exported almost 200,000 cars. So previously, go right back 10 years, for the likes of BMW, Mercedes, China was over 35% of their global sales. And China is cannibalizing a lot of areas where people have been too relaxed. And we've seen this area of rare earths. Hats off to them. They've been extremely strategic about it. So lots of people have rare earths. It's not like you can't dig them up in Australia or the US or everything. The problem is Western countries as a whole have gone, we've got the cheap stuff from China, we won't bother thinking about anything in a strategic perspective. So China doesn't have all the rare earths, but it has practically the great bulk of refining capability for it. And it's the refining thing that you need to get the rare earths. So if the West wants to have its own rare earth supply, unless they did a sort of the equivalent of a World War II type industrialization, the earliest we could be expecting to see countries producing their own rare earth magnets, etc., is probably 5 to 10 years because of what the time lags that everything takes. So China is a severe issue, and it's interesting as well that up until now the EU has been rather sort of relaxed about China. And then all of a sudden after the G7, von der Leyen came out and she's actually gone, right, actually no, we're doing this stuff about subsidies, so you don't have to go through World Trade Organization or stuff like that. You can act very quickly. Chinese companies are no longer bothering to tender, so they were looking to do, for example, I think it was a rail contract in Bulgaria. But because Bulgaria is in the EU and soon to be in the Euro, but you had to provide details of subsidies. Funnily enough, the Chinese company withdrew. So there is that sort of stuff, and China is an existential challenge to certainly the manufacturing part of the EU, and that really takes in Germany and Poland and the Czech.
And what are your comments about China's dominance in the manufacture of microchips today?
China produces lots of low-grade microchips. Chinese microchips basically go to Chinese goods. And you can have the stuff about national security arguments about using Huawei equipment, be it for telecoms or cameras and stuff like that. But overall, this is actually, I'm a historian by background. I didn't do economics and economic history. So it's high-end chips, it's the top chips, the ones that are produced by the likes of TSMC in Taiwan or NVIDIA chips. China is not competing on those yet, but they will be because they're just putting vast amounts of money, and you can see the things that's happening with AI with their DeepSeek model. So rather than having to use the best chips, the most expensive ones, they just use lots of lower ones. So call it like a swarm of worker ants, for want of a better description, to get results that are very similar. And actually, funny enough, less energy intensive. So China's not a threat. In fact, I mean, the dispute between the US on national security grounds with China about chips is sort of, it's got echoes of disputes between the US and Japan in the 1930s, which was to do with oil. So the US put an oil embargo on Japan. Japan then thought, well, there's oil down in Malaysia and stuff like that. Well, you end up with that sort of situation. Is that going to lead to World War II now? I mean, no, I don't think it is, because the reality is the economic dependencies are still far too intertwined. You can't have, let's boycott China. Well, China now produces over 30% of it's 30% of global manufacturing value, and it is ruthlessly competitive. And that's one of the problems. People just, in so many areas, people just can't compete.
And what about the dynamics between China and the US with the new presidency in the US?
There's challenges on both sides. So we shouldn't forget that China has some significant structural problems. One, it's got an aging population, which is now starting to shrink. The working population is starting to fall at quite a rapid rate. It has a horrendous housing bust, there's estimated to be something like 60 million vacant apartments in China. So prices are down to about 2016, 2017 levels. Fortunately, because of the mortgage restrictions, they weren't allowed to get highly leveraged. They couldn't get 100% mortgage or 90% mortgage, things like that. Consumer demand in China remains very depressed. So you hear retail sales were stronger than expected in May, and they were up like 6%. But that's largely because they're running these subsidy things. Household goods, give us your washing machine, you get a discount on the new one. And we give you vouchers and stuff like that. Well, that's all very well and good in the short term, but it's a one-off boost. And if your housing market's in recession, well, then your natural turn, because it's the housing market that is the general stimulator for demand for household goods. You think when you move home, that's when you buy everything. Okay, then you're just on replacement mode or upgrade mode down the line. And in the US, so the Xi-Trump thing, it's semi-confrontational. They're like two prize fighters going around a ring. But neither of them really wants to throw the punch. So we've seen this stuff with tariffs and the back and forth thing, and then people go, well, actually, no, we can't do that because we need those. Oh, we didn't think about those rare earth magnets, which literally have caused production lines to stop or be suspended both in Europe and in the US. And then Trump's, I think most people, Trump won the popular vote in the election. No one thought it was going to be as extreme. And we don't know how it's going to play out. Will it be inflationary? Will it be a one-off boost? Will actually sellers actually have to take a hit on their margins, which have expanded quite markedly since the pandemic, or from the start of the pandemic. So there's always various, if it's just a one-off bump, and then we just get back to normal, then we'll just cruise on. But there are other issues everywhere about, we talk levels of government debt. We look at Europe, we look at the US, the UK, and China. China actually, for all its success, has the highest amount, and when we talk about debt, I'm talking about private sector and government. So in the US, you now have government debt at 100% of GDP. It's close to it in the UK. It's well above it in France and Italy. And particularly in Europe, you've got the problem of aging populations, far more than the UK and the US. China's total debt to GDP is around about 340% of GDP. Actually puts everyone else to shame. Italy, perversely, its actual total debt burden is lower than that of Germany, because basically the Italian private sector has very little debt, which is something that's not really commented on. France, in contrast, everyone seems to have got debt. The government's got vast amounts of debt, the business sector's got vast amounts, and they are this 300% levels. So these are problems down the line as well. So that are real big long-term challenges, and of course nobody wants to face up to them. No one wants to say, address these issues about actually can we afford pensions.
Mm-hmm. So you're saying that you're now fully occupied as an independent financial strategist.
Over the years, obviously, you build up a load of network, people I've known from when I was trading to advising when I was at banks, and fortunately, quite a lot of them seem to like what I do, and now they're my clients. So some of the largest hedge funds in the world, some big asset managers as well, who manage big bond funds, things like that. And so I basically, and I sit there with a great big screen with my Bloomberg on it, and so even though I'm in Malta, I don't seem to get to spend that much time enjoying the outside. I mean, the strict term is like, in the market side is like it's what we do is called global macro. But but my idea is, so you get the people who are economists, but I mean, they couldn't tell you, where do you think the best value is? What do you think where do you think the optionality lies in interest rate markets or in foreign exchange, or what do you think is going to happen? I think my sort of, I hate it's a horrible description, but USP is I'm pretty good about looking at tying all these things together, and then saying to the people, so they literally, and you can have a track record of that, of I said do this or I said do that. I think there's a greater chance of interest rates are going to come down quicker in certain countries than others, and you can, and people have no idea about the size of interest rate markets. I mean, the volumes that are done in them, and I mean, and it's not just by people can call hedge fund speculators. No, they're not, because most hedge funds are actually managing money for pension funds and other main investors. They're seen as a diversification within an overall portfolio approach. So, my whole premise is to help my clients make money. I mean, if I don't, then I'm as useful as a chocolate teapot, and why should they bother listening to me? So it takes a lot of work.
How would you advise your clients to invest in digital assets, for example, in Bitcoin, since it's the most popular?
I know plenty of people who are very on top of that, and it's not. I mean, I know it's big in Malta. The unfortunate thing is...
You said it's big in Malta? You mean more so than other countries?
Well, maybe it goes with the gambling.
But I've just come back from Asia, and they're crazy about crypto.
Oh, no, they are. Yeah. I mean, the question is, so someone says to you, I've created this coin, and by the way, it's going to go up and down in value. But if the idea is, in a sense, to have what people call a stable coin...
Yes, what about stable coins?
Well, what's the difference between stable coin and a dollar? It's not. It's just the same. But it doesn't mean the stable coin's going to go up in value because it's just a dollar. That's the whole point, stable coin.
Yes, absolutely.
As for Bitcoin, what is it? It's ethereal. It's just what everyone thinks. It's almost like it was like when people during COVID were buying EFTs.
Oh, you mean NFTs?
NFT, whatever.
NFTs.
And you just think like...
They're not so popular anymore.
No, but the question is, how fashionable is it and how real is it?
Yes.
So, look, it's not my area of expertise. And therefore, I won't advise people. I mean, it's a bit like me trying to tell a brain surgeon what to do.
And what are your thoughts about Bitcoin whales, those who invest so heavily in Bitcoin?
Most people don't realise that the bulk of Bitcoin is owned by a minority of people. And there's an awful lot of stuff where you look at it and I think about it, and as I said, I'm an economic historian, and I think about like the South Sea bubble, or the Florida land boom of the 1920s, or even the housing boom and bust in the US. This idea that people can put all their money into an asset, but that fine, as long as I can get out of it and actually get some realisable cash. But it's okay. So people go, right, my Bitcoin is where, I don't know where it is today, $104,000. As long as I can sell it and get my $104,000, great. As long as Kim Jong-il doesn't steal it, and I think they've managed to steal about $2.5 billion worth. I have to admit, I'm a long-term skeptic. Piece of gold, fine. Maybe I'm too old, maybe I'm too much of a Luddite.
You're mentioning gold. Gold is not so popular today, is it?
Yeah, it's record prices, $3,400 an ounce. But again, what we're seeing, and this is one of my things that concerns me, and this has been in particular, it's come with social media, it's come with smartphones, and you have your things like your Robin Hoods, and when I go in, and I remember at times seeing on the side of a bus in London talking about eToro, and literally trying to tell people, the man in the street, oh, put your money on a trading application and just make money, it's like easy. Whereas actually 80% of people lose money on those things. So, how do I put it? There's been a gamblinization of financial markets, which is also fed by social media. For example, I've got a Twitter account, and I use FinTwit. We call it FinTwit, and that's people, loads of people I know on it who are involved, and we share financial information, we share economics, opinions, and I get all these bot replies, and all these bot replies about, oh, you should look at this guy, and there's a link, he's come with really good ideas, there's some link to some dodgy website which says buy these stocks. So basically the man in the street needs to be more cautious.
It's all about good marketing, isn't it?
It's all about, a lot of it is about robbing people, it's scamming people. I mean, and this is, don't forget, I was just reading a story about China the other day, or not just in China, but people getting scammed about a bit like Jordan Belfort. So Wolf of Wall Street, imagine what the Wolf of Wall Street, so this is all set, Wolf of Wall Street, if everybody's seen the movie, set in like the hedonistic 1980s. It's like Don Johnson type suits, and we're all out, 90s. Imagine Wolf of Wall Street now cubed because of social media and stuff like that. How many more people would he have scammed? How much money would he have stolen? So there's a huge amount of that, and everywhere around the world, the fastest rising crime is fraud, financial fraud. So my advice to the general public, when someone says to you something, oh, something's really good, it's generally not. I mean, most long-term experienced professional investors will tell you if I make high single digits a year, I average that over time, I'm doing a good job. That's even the Warren Buffett approach. Okay, he made better than that. But overall, that is the norm. Making a fortune overnight is not the norm, because if you make a fortune overnight, you can also lose it overnight, and this is human psyche.
And what do you think is the secret of Warren Buffett's success? I mean, he is a one-off.
Oh yeah, well, people read about that. He basically went out and he bought an insurance company. He realised that they call it the float, the cash assets that insurance companies have to keep, could be made better use of. And he basically went round and hunted around for good families, but a lot of the business they've done, for example, within Berkshire Hathaway, he's got to know them. He's like gone along and he's bought into them. Those, the owners have actually sold out to them and stayed working there. There's an ethos of that. One of his things is, a moat. So find a business that not many other people compete with. And what's the other line he had? It's when, be cautious when everyone's greedy, and be greedy when everyone's cautious. So famously, going into the GFC, he had very large amounts of cash. Funnily enough, Berkshire Hathaway has extremely large amounts of cash now, because they felt valuations were stretched, didn't like the look of a financial company. Then famously, after the crash, he went out and he invested a lot of money, for example, in Bank of America, with these huge warrants and chats. He lent money to Goldman Sachs at very high rates. So that's the secret. I mean, my sons will tell you that when it comes to business, my favourite two words are distressed seller, because that's when you know you're getting something that's below you know, I'm paying less than intrinsic value. The problem is the average man in the street doesn't have that ability, doesn't have that financial wherewithal, so therefore he's left looking at, oh, my mate's got this trading app. My advice to most people with a trading app on their phone, delete it.
Because I suppose they don't know enough about it. You're talking about Warren Buffett and all this money, and yet he's giving it away.
Yeah, I mean, I think that's admirable. The charitable foundation or whatever, I mean, it's how much money do you need? I mean, you know, I can't remember if you think what he's worth, $100 billion or more. I mean, he's given away billions over the years as it stands. But, I mean, you know, Bill Gates has said the same thing. But it sounds a lot of money, but then you think about it in the context of, well, global GDP is 110 trillion a year. It's not a lot of money. It can have a small benefit to certain areas, but ultimately it's not the fundamental issue. The fundamental challenge, and this brings me back to what I said before, we call it cakeism. You want to have your cake and eat it. The problem is you don't want to have to pay for the ingredients of the cooking time. So everyone's going, I want my pension, and I would like to retire early, but actually who's going to pay for it when you've got to shrink it, when you've got an aging population and a falling population because the birth rates are so low. And it's a structural problem for Malta, it's a structural problem for Italy, it's a structural problem for most of Europe. And Asia as well, China, Korea. And the reality is, so we're talking about geopolitics now, and people are talking about, you know, what's happening in the Middle East. Whatever one's views are on it, it's taken, you know, and you think back to like World War II, and the stoicism that people had to show, you know, particularly on this island, the sacrifice and the hard choices. And the problem is, you know, nobody seems to want to take hard choices these days. No one seems to say, actually, how are we going to pay for it? No one wants to have a conversation with their electorate and go, actually, guys, we haven't got any money. You can't have it.
Before we close for today, I'd like to speak about AI. How is it impacting financial markets, in your opinion? And should it be regulated?
I mean, it's impossible to regulate it. It's viral. It's there. You can't regulate it. I mean, you can. You know, you can't. I mean, I was reading today that something like 20,000 songs or music things are coming out every day from AI. That's AI generated now, and it can be multiples of that. There is. Funny enough, there was an article I was reading on today. I think it was in the New York Times or something like that, actually showing that some researchers saying that actually AI is dumbing down students. So basically, fine. Go back to, if you want to have exams, you sit everybody in a room and you may use paper and pen.
It's the only way, otherwise you wouldn't know.
Is AI impacting on financial markets? Well, we've already had for years so many financial firms using algorithms to get ahead, to recognize signals. So it's in a way AI not as sophisticated, but earlier life forms of AI have been running for a considerable period of time. Is it going to impacting? Well, it certainly is impacting already in some areas. What we're seeing is Microsoft, for example, is about to lay off another people, 8,000 people, so that'll be 14,000 people in the past year. AI is replacing lower level coders. AI, a lot of documentation can replace a lot of people like that. Graduate unemployment now is at a record level higher than the actual overall unemployment rate. Now, you could argue, is that because, one, there's been this push in many countries to get more people into higher education to basically do rubbish degrees, and people would actually be better off, financially better off, learning to become an electrician or a plumber. And so like in the UK, you have the average graduate salary, it's margin over the minimum wage, partly because minimum wage has gone up by so much in the UK. So minimum wage in the UK is now £12.40 an hour. You have employment, guaranteed holiday pay, all this sort of other stuff. So if you're doing £12.40 an hour and you're doing a 40-hour week, you're on like £25,000 a year. So the differential between the average graduate salary and the minimum wage is the tightest it's ever been. And a lot of people, I would say, don't go to university. And especially in this day and age, whereas there is so much going on, you've got to do them. It's expensive. I don't know. Okay, if you're in Malta, if you go to University of Malta, you don't get charged fees if you're Maltese, do you?
No, you don't. No.
Whereas we have student debt. So, but you take your fees and your living costs. You do a lousy degree, you come out with £50,000 worth of debt at least. And then when you start earning above a certain amount, they charge you 9%. I take that, and it doesn't really. And they charge you a high rate of interest on it. And you're seeing it in the US with huge amounts of student debt.
You're talking about lousy universities and lousy degrees. I'd like to end on this note because we are here in Malta. What I've noticed, having lived in the UK for a very long time, in Malta they see a UK university as being far superior to any university, let's say globally perhaps, but a lot of people in Malta would not be able to differentiate between one UK university and the other.
Oh yeah, no.
So what would you say? We've got a Maltese audience today. What would you say?
No, you have to.
Can you explain
everyone's got a smartphone, everyone's got Google. You can just read the rankings. And then because that's a very good indicator. But also there's lots of evidence out there about which universities whose graduates have the highest average starting salary.
Yes.
And basically places like LSE, UCL, Oxford and Cambridge clearly, specialised ones like UMIST, the ones that deal with, if you're into engineering, that focus on engineering, Imperial, for example. So, but the competition to get into those is intense as well.
Absolutely, but once you come back to Malta from any university in the UK, it gives you an advantage in the job market.
I think we're talking, but when it comes to talking about Malta, I think Malta's got, I think it's got a huge amount of potential. But at the moment, okay, it's incredibly dependent on tourism. But it has, it has its issues. I just saw today that, or 2 days ago, the European ECJ is now coming after about Rule 55 about the gambling companies.
Yes.
So every other gambling country in Europe can be sued for damages, whereas the Maltese have ring-fenced them. And that's a breach of EU law. And we saw the thing about the passport selling, and taking it doesn't do Malta any favours when you know you're on a loser, but you insist on taking it all the way to the final end at the ECJ, to then have it plastered in every major newspaper around the world. So Malta needs to move away from, it can't just be dependent on, as I look out the window, cranes and building more apartment blocks that are largely empty, or betting companies and just tourism. Malta has a lot of potential. If you think about geographically where it is, and if things get better in North Africa and stuff like that, there's a potential for, think about Singapore. Singapore's turning itself into a Asian headquarters for many companies. A lot of companies have moved there, particularly since the handover of Hong Kong and the national security law. National security law in Hong Kong in 2019. I know many people who have left since then, or businesses that have relocated outside of Hong Kong. Malta is perfect. It has a great location. It's got well-educated workforce that, as all the Times of Malta and all the media tell us, is, something like 17 or 20 graduates are leaving Malta every day.
There's a brain drain.
You're using your brain drain. It can't have its cakeism when it comes to Europe. It needs to become, raise its reputation It's a polite way of putting it. Because why couldn't Malta go out and actually start to think about, well, why can't we do more?
And what would an ideal new sector for Malta be, in your opinion?
I mean, funny enough, I was talking to somebody this the other day, and O&G, oil and gas, is an obvious one. You know, you've got secure location, but you're still, I mean, I was talking to other people, and it's like, given a geographic location, surely, and I think it does, but I was told that actually back in the early days of the 70s that Malta was allegedly paid off by Gaddafi not to bother going after its reserve. But Malta's energy dependent, it imports electricity, you know. Surely Malta has its own oil and gas reserves, given how close we are to the, right, with things like that. I mean, O&G would seem to me to be a prime area. You know, you've got shipyards, you've got engineering skills. I know people who come in here and they bring ships to Malta to have the work done because they're very good at that. Actually, that would be another area to focus on. You know, because look at skill sets, look at geographical location. I mean, it is. You know, think about the history of Malta. What's Malta's history? Malta was always this island that people used as a trading stop-off because of its location. And, you know, given the proximity to Africa and the potential, I would say, if Malta can really start to get more business focused, I mean, I'm proper business focused, not gambling and property, productive business focused, then the island could do a lot better, and it would raise the standard of living for everybody because it means to be more high-paid jobs for Maltese. They won't have to leave. They'll be able to afford a home. They'll be able to have, you know, live in a nice house because at the moment, looking at the data, Malta has the average lowest income in the EU.
Yes, but quite a high cost of living.
Yeah, if you actually look at Spain and Portugal and how they've revamped their economies. And maybe there's an argument that they've done it so well because they had to take so much pain during the GFC. So their banking institutions collapsed. They really took a lot of pain. Unemployment absolutely surged. You know, we're talking about Spain, and I think the peak was like 25%. And similarly in Portugal. So they had those scarring experiences. So they deregulated. They've made themselves more business friendly. Okay, Spain's clearly got some corruption issues at the moment with the current government, but overall, they are attracting investment. They attract, you know, they made themselves. They've moved up the value chain. You think about Seat cars. Seat cars used to be like laders. They're not anymore. Okay, Malta's never going to be. It doesn't make itself it's not got the resources, the land to be a manufacturing place, but it's got the resources to be an attractive location for a company to maybe put a European head office, particularly if they deal in around the southern Mediterranean and the North African coast. And so, yeah, I mean, but again, it's are people willing to have these conversations?
You mentioned energy. There are still some repercussions here following some energy scandals.
There's some. I did see some stuff about. I'm not completely au fait with that, but
which brings us back to Malta's reputation.
Yeah, it needs. There needs to be some grown-ups in the room, and unfortunately, you can walk into Valletta and you can see the whole thing about the building worker or Daphne's memorial, things like that. And there needs to be some grown-ups in the room who say, actually, I never see it. I follow the Maltese press. You never really see Maltese politicians talking about a sense of destiny for Malta. It's all like, we'll carry on doing it. I'm half Italian, I know what Italians are like. I mean, so I can criticize Southern European mentality at times. It's like, or I've lived in Greece and it's Avrio. But sometimes it has to be today, and it has to be now. Because there's plenty of bright people here. I mean, there's plenty of successful businessmen. The problem is, there's also a minor, you know, there is clearly an elite on the island, and they're comfortable. So why do I need to fix anything? But they should, because if they may be rich, but if they get everybody else better off, they'll be even richer. And then they can start thinking about having a problem like Warren Buffett, perhaps.
Thank you very much, Patrick. Thank you for joining us today.
Thanks. Pleasure. Thank you.
Grazzi, Signori, li kontu magħna illum. Tkellimt ma' Patrick Perret-Green li huwa speċjalist tal-ġeopolitika u tal-investiment finanzjarju. Jekk għandkom xi kummenti, ibatuhom pas-soltu fuq in-numru li jidher fuq l-iskrin permezz tal-WhatsApp. Jiena Lejha Hogg għal Net TV u nixtieqilkom il-lejli tajjeb.
Erġa' segwi dan il-programm fuq Net on Demand.